About Value Partners, we are a listed company. We have a market cap today of something like $3 or $3.5 billion US dollars. But in fact, we started very small. I was the co-founder with Mr. Ye in 1993. At that time, we had about $4.5 million US under management. Today, we're managing about 17 billion US dollars. Let's talk about the Asian economic miracle. We are the first and so far the only asset management company listed in Hong Kong. And our main claim to fame is performance. We have won more than 100 performance awards since inception. We have an annualized return of 17.2% per annum compounded since inception, net to client. We are contrarian, of course, very, very contrarian, much more than you might believe, which in Asia actually works. Because the Asian investors, in general, many of the markets are very retail dominated. People are like sheep. Sentiments swing from one extreme to another. By going against a crowd, in an intelligent manner, you can often make outsized profits. All of a sudden, from July last year, 2014, the market simply shot up about 100% actually. Became one of the ugly ducklings of the global markets to one of the beautiful princesses, which is the theme of my speech. The key question now is, are we in the beginning, the middle, or the end of this run? Because of course, all runs, it will end eventually. And that we are now in the middle of the run. We are definitely not in the beginning. Now that the market's got 100%, but we're not at the end either. So far, there has been little correlationship between the economic growth of China and the performance of the Chinese stock market. This is somewhat true for the United States as well, that the performance of the S&P 500 or the Dow may not correspond that well to US GDP growth, especially since the introduction of QE, quantitative easing, after the global financial crisis. Stocks have a life of their own because of the liquidity. There's still a lot of work to be done in China because it's a big country with a lot of people. 1/5 of humanity is Chinese. So GDP per capita is low, as you can see on the slide. There are a lot of things that are still very underbuilt in China. For example, healthcare, the services industry, transportation, utilities, travel and leisure, financial services. All these are still moderately to very primitive by advanced country standards in China. One of the things I learned about China is that it's a state capitalism. It's different from the Western style. It's also capitalism, but it's a state or command economy situation still. So usually, at least maybe 70% of the time, the government gets what it wants. Right now, the government wants the stock market to go up for its own reasons. But Beijing really wants the bull market to proceed slowly and gradually. And the bull market is not very obedient to that. The bull market is going up quite a bit faster. So now and then you'll see some angry noises that will cause a spike down, and then they'll relax again and spike up. It will be a very turbulent market, but the underlying direction is, I think, up. Thank you so much. Thank you very much.